Hey everyone, welcome back to the channel, your number one source for income-oriented investing. Time to go over the Canadian listed landscape. So today we're going to look at, as usual, like we do every month, the income-oriented landscape in Canada. So first, let's check out what the markets have been doing in the last month. It's been an absolute crazy roller coaster ride. The fun begins, guys. Finally, we've got some volatility, a lot of volatility in the market. For the record, I'm filming this during the afternoon or noon on April the 9th. I woke up and the S&P 100 was flat. Now it's going up. It's just been a crazy, absolutely crazy, insane roller coaster ride. You got big swings even during the day, which makes absolutely no sense. How could values of companies be worth one thing and then drastically another thing within just a few hours? It makes no sense. So if we look at the 1 month, in the last month, S&P 500 is down 10%. So we're definitely in correction territory. NASDAQ even more pronounced, down 10%. They're both down 10% in the last month, but obviously if you head out and zoom out a little bit to 6 months, for example, down 13.86, down 12. So yeah, it's been a nasty couple of weeks. A couple of days on Wall Street. Even the Canadian stock market today, it's actually right now it's down half a percentage point, but in the last month it's down 8%. So of course, all roads follow America, I guess. All stock markets are down around the world. So yeah, remember to keep cool, keep calm, guys. This is completely normal. The markets cannot just go up and up and up, right? If you do 5 years of the S&P 500, I mean, the last year we've had, I mean, it's been absolutely on a tear, still up significantly over the past 5 years. So there has to be some sort of correction, eventually. You just can't keep going up forever. And if it does keep going up and up and up for a long period of time, when it goes down, it's only going to be harder. So yes, this is being triggered by obviously the Trump tariffs, the upcoming trade war that looks like it's going to be happening, but in my opinion, this is just going to be a temporary thing. How temporary? I don't know, but I'm not a speculator. I'm an investor. So I'm just going to keep doing what I do and buy as much as I can every single month and continue being a cool, calm level income investor. So make sure to give a thumbs up on this video, guys. It really helps. I would really appreciate it. So let's go over the Canadian listed landscape now. Before we do that, I'd like to thank the sponsor and good friend of the channel, Harvest ETFs, which they will actually be coming out in April. So I think in a week or two, with 2 low volatility ETFs. So the timing couldn't be better. It's going to be HVOI. They're going to have a covered call version. And then there's HVOL, which is a non-covered call version. And this is going to focus on companies in Canada. 40 Canadian companies here, maximum of 4% each name. And it's actually going to be managed by Chris Heeks. He used to manage the low portfolio of the very popular low volatility ETFs at BMO, and now he went to Harvest ETFs to manage these recently launched ETFs. And I am going to be doing a full Q&A with him. We don't have the complete information about the holdings yet because as I'm filming this, the ETF is not launched yet, but we'll know more about this, and stay tuned for an upcoming episode where me and Chris will sit down and talk all about these ETFs. And again, HVOI, this is going to be the covered call version, and then there's going to be HVOL, just a regular non-covered call version. So thanks again to Harvest ETFs for sponsoring this monthly series and being a good friend of the channel. Let's continue on now. Let's go through the Great 10, if you will. I'm going to make a new video very soon to upgrade the Great 8. The Great 8 is going to become the Great 10. I'm very excited to film that video soon. So let's go through them, guys. Let's start with the leveraged and diversified. So leveraged, 25%. In case of BMAX, it's 33%. And diversified funds, which I feel are really some of the top ones to buy and hold forever as an income investor. You have HDIF, and guys, when the markets go down significantly, when prices go down significantly, guess what? Yields go up significantly as well. So you see HDIF now is over 12%. This is their monthly diversified income ETF. Of course, there's a non-leveraged version as well, HRIF. They also have a 60-40 one, right? Still diversified, but 60% stocks, 40% fixed income. HBIE still uses 25% leverage here. The yield on this one has gone up as well. They should be posting the yield soon, I believe, on their page, because I think it's been a year that this one's been out. Remember, Canadian ETF providers cannot show yields until the ETF has been out for at least a year. And of course, they also have the high income shares, which of course are very much under pressure because they obviously invest in a single stock, and a lot of them are technology stocks. And usually when volatility starts, everyone, it's the more higher risk, higher speculative stocks that suffer first. That is still the technology stocks. They go up really, really hard. They could come down really, really hard. That's what's happening. So it's going to be a good test to see, guys, as you know, if the volatility continues, what's going to happen. You guys know that my favorite one probably is HHIS. This is the all-in-one. The all-in-one here, which has all 14 stocks. A lot of them are technology, right? Yes, there's Costco and some more boring stuff in there, like Eli Lilly and Costco, but there's a lot of them are technology stocks which have fallen. So it's going to be interesting to see what is going to be the April dividends on a lot of these funds, right? The big test is coming, but I do expect, you got to expect, remember, HHIS just makes up a basket of the single ones, right? 14. You actually have the percentage here. So if HHIS is going to reduce the distribution, it really depends on these ones if they reduce their distribution. And my guess is that yes, they might be able, they probably will be some reductions, which means that will translate into probably a slight reduction in HHIS. We'll have to wait and see. I know that we all know that, you know, call premiums are based on volatility. And when volatility spikes like it's doing now, yes, these fund managers are taking in a lot more premium. But remember, the premium depends on the net asset value and the volatility. So yes, volatility is spiking, so they're taking in more premiums, but the NAVs are declining, which means they're taking in less premium. So it's all about how could it balance out, right? Well, it seems like, well, there you go. The S&P's up 1% right now. Now it's going back down. Who knows by end of the day what it's going to be at. It's just crazy volatility. So next month, guys, next month's episode, make sure you're subscribed to the channel because we do this every single month. We review the important income-oriented ETFs every single month to keep track of them. So the real test is going to be in the next couple of months to see who reduces, but you gotta, I'm expecting maybe slight reduction or some reductions with HHIS. Maybe not next month, but eventually, especially if, you know, the single ones start reducing. For example, Tesla, I believe, had to reduce a little bit, which is completely normal, right? It went from 32 cents to 29 cents, but then HHIS, you know, replaced the leveraged MicroStrategy, replaced the non-leveraged MicroStrategy and Coinbase ETFs with the leverage ones, because the leverage ones came out, so that helped to increase it. So we'll see what happens, guys. It's going to be an interesting time. So HHIS is still going to be one of my core positions. I'm going to keep averaging it down, and again, I'll be sharing with you all my buys every single month. If you want to know what I'm buying every single month the day of, make sure you're a member. Click that little join button to figure out, you know, to find out what it's all about. But that is one of the perks to be when you're an Inner Circle member. So moving on, we have HYLD. So these yields are only updated once a month. So I know yield is much, much higher than that based on the latest distribution of 14.5 cents. So we'll have to see what they do next month if they declare the same one. HDIV, all these leveraged ETFs, remember 25% leverage, they will go down harder by 25% during volatility. So the yields are absolutely enormous right now. You have USCL, which is over 16% yield, guys. You have QQCL, which is over 18. So again, it's going to be interesting to see what the next distributions are going to be. Are they going to keep them? Are they going to reduce them a little bit? But even if they do, you got to be ready for it. This is something that's completely normal. And then when the NAVs recover, my guess is that they will re-increase them again, right? We know that in 2024, QQCL, for example, distribution was 25 cents. Then in 2025, they increased it to 29.5. So will they keep it at 29.5 for the whole year and reset them every year? We'll have to see what happens. And by the way, I'm excited to tell you that I am actually going to be heading out to Toronto to visit with Global X, to do some videos with them for their channel. I'm going to be sitting down with the Chief Investment Officer, Chris, and we're going to talk all about the Global X covered call ETFs, the strategy. I'm just going to have a million questions for him. I absolutely can't wait. Moving on to the list, you have CNCL, which is the TSX60. This one's at 12. EQCL's at 14. This is if you want the whole world. Then you have Brompton's all-in-one BMAX. This is the only one that uses 33% leverage. This one's at about 18, like it says here, 11.5 now. This is usually under 10. And I'm going to add EIT to this section. I know it's not an ETF, it's a closed-end fund, but EIT is a really, really good fund. It is a closed-end fund. It is leveraged too. It is leveraged 20%. Still trading at a discount right now. You see the net asset value, it's worth $14, and it's trading at about $13.89 here. This is based on the 8th, so it's a day old. But EIT has been, if you're asking why has it been particularly resilient, it's been down as well. Well, that's because it barely has any technology. That's why, right? Whenever I talk about EIT, that is really the most important thing that stands out to me. That's different really about like an S&P 500 or any the ones we've recently seen. There's definitely more technology in there. So this is more like value stocks. It's very heavy on the financials and the energy. Energy hasn't been doing well lately. And it also has Canada, US, and they're starting to add a little bit of international. So EIT, always a fantastic choice and going to be part of the Great 10 for sure going forward. Moving on to the non-leveraged covered call or income-oriented funds, guys. Again, I'm sticking with just diversified here. You have BMO's all-in-one. You see that the yield is starting to increase as well on this one. Still only 6.75. This is definitely more muted in terms of covered calls. We know that BMO does less covered calls than the other guys. You have ESPX. This is the Evolve S&P 500 covered call ETF. I think this one's at about 13% yield. This is the 12-month trailing. So this is the average of the last 12 months. But we know that ESPX and even ETSX, the TSX60 index covered call ETF, have both increased their distribution rates. And by the way, I did do a Q&A and sit down with Elliot, the Chief Investment Officer at Evolve ETFs. That interview is going to come out very shortly, and we talk about ETSX, ESPX in detail about the strategy. So maybe if you're not comfortable with that leverage, these could be really good ones to consider. Moving on the list, you have the very, very popular JEPI and JEPQ, right? Same stock symbols, but on the Canadian stock market, now Canadians could buy JEPI and JEPQ. So I see JEPI as a defensive style stock picking within the S&P 500, and the latest distribution, definitely the highest one so far. I expect probably them to go up, and a lot of covered call ETFs are actually going to raise their distributions, guys. Don't be surprised of that also, because again, volatility increases call premium. So April 1 has been declared and is much higher, 50% higher than the last month. Same thing goes for JEPQ, which is more than NASDAQ 100, right? 26 cents, not the highest, but I expect next month we'll see what happens. I think it's going to go a little bit higher. So plenty of options here for S&P and NASDAQ, guys. It just never ends. You have Fidelity as well. You have FEPI, which just does a rinse and repeat 2% out of the money call on the S&P 500. Fairly consistent distributions. Latest one a little bit higher than last month. I think you're looking at more or less like 7, 8, 9% on FEPI. This is definitely compares the kind of yield with JEPI, I believe. It's really SPX that I believe has the highest yield right now in terms of non-leveraged S&P 500 covered call ETFs. You also have EQLI, which is probably doing better than the market cap weighted S&P 500. So EQLI is S&P 500 but equal weight. So of course, if the biggest stocks in the index, like Apple and the technology stocks are getting hit really, really hard, one that's equal weight maybe won't get hit as hard. So this one's actually pretty popular because it's already over 110 million in assets. I don't even think it's been out for a year yet. The yield, well, they can't do the yield because it hasn't been out yet for a year, I believe. It hasn't been out longer than a year. But very consistent distributions here, monthly distributions, and it's about 9% yield, I believe. They also have QQCI, which pretty much competes with QQCC, which is the non-leveraged version of QQCL, and also competes with JEPQ. So they also have a NASDAQ 100 one as well. 30 million in assets. The distribution a little bit lower here at 17 cents. Moving on, PDIV. PDIV is absolutely has a huge yield right now. So this one has Canada and US. There's covered calls, but there's no leverage. They also do puts as well. So this is an interesting one if you want kind of Canada and the US. It's comparable to maybe HDIV from Hamilton. I would always prefer HDIV and something with leverage. You guys know that I always prefer buying and holding forever the leverage ones. If you're going to buy and hold forever, why have the non-leveraged ones? I don't really understand why, but PDIV is also a good choice, I guess, in the non-leveraged space. Moving on to the more niche stuff, you have Purpose has, just like HHIS and the Harvest ones. You have Purpose here that has a bunch of single stock cover call ETFs. All of them have 25% leverage. So of course, these ones are going to be under pressure. We'll see if they reduce their distributions. Typically, Purpose does reduce their distributions when NAVs go down significantly. We'll have to wait and see. They kind of do have an all-in-one now called YMAG. And if we look at the portfolio, there's Broadcom, there's Apple, a lot of Apple, a lot of Microsoft. So this, if you're looking for technology specific, this could be a good choice to really capitalize on the volatility that technology is having right now. Bitcoin as well is going down. It's at 78,000, something like that. So BTCY's yield is over 15% now. 14 for the non-Canadian hedged. So and get ready, guys, there's more Bitcoin covered call ETFs coming. You guys know that I prefer strategy. That's just leverage Bitcoin in my view. So I have MicroStrategy by Harvest with covered call ETFs, which is this one right here, MSTE. So this one, the yield is absolutely astronomical right now. It's like over 60% yield, I believe. But I wouldn't be surprised if there's a distribution decrease. There absolutely has to be. This is my Bitcoin exposure, but stay tuned because we're going to have a lot more choice coming up when it comes to Bitcoin covered call options. There's going to be Global X, Canada, and also Harvest are going to be launching their own Bitcoin covered call ETF. So we'll actually have an alternative to the Purpose one here. Moving on to split funds, so there's still a lot of split funds trading at discounts. This is really the more dangerous times for split funds in terms of missing dividends, but this is where you could actually capitalize a lot. So we got to keep our eye on those discounts here. And of course, we have now an all-in-one Class A share ETF from Brompton. It dropped a lot. And I actually did a Q&A with Brompton. That video is also going to come out soon where we talk about Class A or CLSA ETF in detail. So now you actually have a choice. If you like split funds, but you don't want to pick and choose, you don't want to deal with that missing dividends, this is a very interesting ETF because this is a little teaser, a little preview. They intend to always pay out and never miss dividends with this ETF. So let's keep our eyes out, everyone, for the big discounts that could be coming for these split funds. Remember that every single Friday, I do a weekly opportunity report for members to talk about the Brompton and the Middlefield discounts to NAV. If we look at Middlefield, RS is, real estate continues to tank. The NAV of RS, I've never seen the NAV this low at 788, but that means the unit NAV is still just under $18, so there's no danger of any dividend misses yet. And you have ENS, of course, trading still at a very big discount. As you could see, even the infrastructure one, the gap is closing, right? It's still trading at a discount, but a very, very small discount. So it looks like those discounts are narrowing for some of these split funds. So Guys, it's a crazy volatile and exciting time now. Virtually everything is on sale, but if I had to pick and choose one particular sector, it's definitely the technology sector. So there's many ways you could capitalize, guys. You could buy a Nasdaq 100, like a QQCL, a QQCC, a JEPQ, a QQCI from Invesco, right? Nasdaq has a lot of technology in there. Or you could buy a technology specific fund like HTAE, which is from Harvest. You see that the yield is, approaching 16%. You have QQQY from Evolve. This is only the technology stocks on the Nasdaq. The yield is absolutely astronomical now, probably in the 17-18% range. This one has no leverage. QMAX has no leverage as well. QMAX is a big position in H yield and HYLD. This one is probably flirting with the 13, 14, maybe 15% yields. Like I said before, you also have the Tech Innovators Yield Share Purpose ETFs, which focuses on 8 technology companies. You also have HHIS, of course, as well from Harvest, right, which has mostly technology companies. So there's plenty of ways to capitalize. And even just averaging down the S&P 500, which has taken a beating. Remember, the S&P 500 is very technology focused. And I don't know what the hell is going on today. I just refreshed it and there's this massive spike. My guess, without even looking, maybe there was some sort of White House announcement. But who knows? It's been absolutely ridiculous. Volatility is going to be absolutely ridiculous probably for the next couple of months, guys, until this trade war stuff calms down. But let's take advantage of it. You could either sell and lose money or take advantage of it. And I'm going to put my money where my mouth is. I'm not selling anything. I'm only going to be buying as much as I can and averaging down. So, guys, the choices are absolutely huge. Everything is on sale. Every sector is on sale. Stay calm. Stay focused. Don't sell anything. Take the big advantage that we retail investors have that hedge funds and then financial companies don't have. They're worried about their next quarterly results, their shareholders. We don't have to worry about that. We stay the course. Keep buying. Don't sell anything. And trust me, in a few months from now, maybe a year from now, I don't know how long this volatility is going to last. If this is your first time experiencing this, enjoy it, because the second and third time is going to be a lot more boring and you're going to be looking actually forward to it. But remember, think with your head, not your stomach. Everything's going to be okay. And keep following me. Keep following my journey in my portfolio. If it gives you confidence, you could follow my portfolio every single day on Blossom, which is an application. You could download it. There's a link in the video description below, guys. You could remember that I'm going to unveil my portfolio as usual every single month on the channel. So make sure you're subscribed. And I unveil all my buys. And dividend day is actually tomorrow. My last dividends coming from HHIS and MSTE. So the dividends are coming today, which means I'm going to get them in Questrade tomorrow. So Hamilton, and I already got the Hamilton ones and the Global X ones, but because they were paid out on the 7th, but Harvest is paying out on the 9th this month, which is today, which means I'll get my dividends tomorrow. So tomorrow I'm going on a buying spree. I'm going to be buying at least $20,000 worth of stuff. If you want to know what I buy, make sure you join the inner circle, click that little join button, and you'll find out what I buy. But either or, I'll tell you all about it in the next portfolio unveil. So stay cool, stay calm, guys. Stay focused, and see you next time.